the claim. And you asked me if I trust my insurance company. I actually have two life insurance policies, and yeah, in a way, from two insurance. But what are the odds? What happens if I die and then they go to the beneficiaries, my kids, my family, and saying, but there was some information that was not disclosed, and we will not be able to pay. I will not
Hmm.
be there to defend my family. I'll not be able to negotiate or prove them wrong. So yeah, there is a risk to.
Assalamu alaikum. Peace. Welcome to a new bonus episode of Taka Talk Season 2, where we explore the world of insurance by picking on the brains of experts to answer all of your burning questions. I am Leila, your curious host, and without further ado, let's introduce today's expert. Ahmed Imira is a highly experienced professional with over 2 decades of expertise in actuarial science, reinsurance, insurtech, Web3, and entrepreneurship. He has held key roles such as head of reinsurance at Insurance House UAE and actuarial advisor at Takasure, pioneering innovative initiatives in Web3, DeFi, life insurance. As the founder of Obeliski and Temin Advisor, Ahmed is driving transformative change in the insurance landscape through strategic innovation and technology integration. Assalamu alaikum, Ahmed, and how are you doing
Alaikum
today?
assalam wa rahmatullah. Thank you, Layla, for having me.
Alhamdulillah, all good. Ahmed, can you please tell us a bit more about yourself?
So I'm an actuary by profession, and I've been in the market for a while. Uh, I worked in reinsurance most of the years, and mostly in on the life insurance side, not the non-life. I did some technology, insurance technology business, and yeah, I've been in Dubai for a while. Started two companies in Dubai. Uh, yeah, that's about it.
Allahumma barik. So we're delighted to have you today, Ahmed. Thank you so much for gracing us with your presence and expertise. We have a lot of questions. So let me ask the viewers today, do you trust your insurance companies? Like, really, what would you like them to do differently? And do you think there are alternatives to the way in which they've been doing things? If yes, how do you go about vetting their claims of being different? All of these questions and more will be asked and answered by Ahmed. But before we get into it, a short story time. Ahmed, do you want to just tell us, how did you fall into actuarial science as a student to pursue your bachelor's degree into it? And why did you continue into trying to get, no, and then why did you continue with pursuing a career into insurance afterwards?
Okay, so it's a total coincidence. Um, After high school, I joined the Faculty of Commerce, and it was like because this is my score. I joined Cairo University, and after the first year of the faculty, there was that small section there, the actuarial science. It was a very new thing at that time, and Alhamdulillah, I was able to join. I passed the exams. They select very few people, and it happened. I was lucky, Alhamdulillah.
Alhamdulillah. So was it something, you say it was random, but something must have,
I
resonated with you when you read
Yes,
actuarial
right.
science?
I've been like I always loved mathematics, and I was good in mathematics. And when I
Mm.
joined the Faculty of Commerce, it was mostly about accounting, which I'm not very good at. So when I found this actuarial science thing, that was very like it clicked. I felt that this is my thing, and I'm happy that I chose that path.
Allah Mubarak, and you also got around to having a very successful career into the industry. Would you just tell us a bit? What was the story, or just the background in
Again,
terms of where you worked when you came out
again,
from uni
Alhamdulillah,
and stuff like
it
that?
just happened. Like it's the coincidence. I graduated as one of the few actuaries in Egypt, and I was referred to work in a national company, one of the companies, and it was the reinsurance company at that time. And I started very early my career as one of the actuaries, and I had a very nice boost, like a push, and I was able to be working with people with experience and learning early about the industry and meet lots of people, seeing different markets, exposed to a very nice experience. I'm happy I had.
That's wonderful. That's amazing. Thank you very much for sharing that. So you've worked extensively into the insurance industry. You've studied actuarial sciences. Um, just to start this conversation, could you tell us? You've mentioned reinsurance as well. What is that? What is the concept of reinsurance? And but even before we get there, we know that many governments mandate some sort of insurance, right? So if you want to have a car, you need to get auto insurance. You need, in many countries, you need to, it's mandatory for you to get health insurance. But in all of those different types of insurance that exist, which one do you think is absolutely critical or necessary for people to have outside of
Mhm.
mandated, government
Very, very
mandated?
good question.
We'll be right back after the
Believe
break.
that the financial system is broken and that our banks and insurance companies do not have our best interests at heart. We've built Tekatone to help us get together as a community to save, earn, and access credit. Join us today and discover how you can grow your savings while helping others.
Good question. Because mandatory insurance is about protecting, mostly about protecting others, like to protect yourselves in your car insurance, if something happened to your car or something happened to your house. But the most important insurance for me, I would say insurance is about covering a risk. You are and the most valuable things you have, and nothing is more valuable than life. So I would say life insurance is the most important insurance.
Allah Mubarak. And many people actually do not understand the concept of life insurance. Um, could you just clarify in a few seconds what is life insurance and why do you think it's that important?
Okay, how can I explain this? Let's say two things. Let's go mathematically, a little bit technical, very basic, very simple mathematics. If we are a group of people, 100 people, we know that death is certain. It's a possibility. There is a probability, but this is this is a risk that is going to happen. I could have my car insured, but for 10 years I don't have any accidents. However, in life insurance, we know it's just a matter of time or when, a question of when. So in life insurance, if we get everyone to contribute with an amount of money, and we take this money and put it in a fund, and this fund is payable only to when a death occurs, when someone passes away, then that money would be, if we are 10, the money is 10 times the payment, single payment. So this is the concept, like it's the cooperative that people will pay for each other if someone dies. So I want this to happen to me, and when I'm alive, I do this to others.
I see. So from a customer perspective, an end customer perspective, it's really you contributing ahead of time. Correct me if I'm wrong. Of course, I'm here to
Absolutely.
pick on your brains, but it's you contributing ahead of time to get some sort of monetary benefit in case you die, or your family would get some sort of
Absolutely.
monetary benefit in
Yes,
case you
absolutely.
die.
So I have kids. If I die today, who's gonna pay for their education, for example? I worry about this. So to
Mm.
secure this or to cover that risk, I contribute small part of the my income, like some payment, and put it in a fund. This fund is becoming larger and bigger as more people join that fund, and then we are able to pay for people when someone dies.
That sounds super interesting. I think any any parent, especially, would be thinking of what happens to my family, that I leave behind in case, the inevitable happens. And I think most people will agree with you. They would like to have a safety net. They would like to have a plan. But at the same time, many people are very um, aversive to the idea of getting a life insurance, and you hear people saying stuff like, oh, they're sweet when they're selling and they're bitter when it's time to pay, or the fine prints, the
Yes,
exclusions and stuff like that. So why do you think many people have an aversion towards insurance, when you have enunciated it as something that is very beneficial and pretty much a safety net for your family in case something happens to you in the case of
because they
life
are right
insurance?
about it. There is a good reason for people to doubt
Oh,
or to suspect the insurance companies.
tell us the
Okay.
reason, please.
So to start with, who's selling the insurance company is a salesperson. It's not the insurance company, and it is of course the responsibility of the insurance company to select the people who are representing the insurance companies. They should be well educated. They are honest people, and so on and so forth. And the insurance company has a capital. This is the maximum amount of money they are able to pay for everyone. If the capital, even if it's a big capital, if it's $100 million, this is everything they can pay. So at the time of, let's say, if it's not making profits or it's making losses, the easy way to not to stop this loss is not to pay claims. So yes, it happens in some cases that insurance companies or people working in insurance would try not to pay claims to reduce these losses or to limit these losses. And the policy, the insurance policy, is a very technical document. It has a lot of insurance information. It has legal information. It has a lot about the economy and finance and mathematics. Especially life insurance. Life insurance could go for 10 years or 20 years. It has a lot about the inflation or a lot of variables there. We don't expect everyone to understand all these things in this policy insurance. So mostly what happens is like when you install an application on your mobile and you just agree on the terms and conditions, you just sign there. You know how much you should pay and how much I get if I die, and that's it. I don't read the exclusions list and so on. So at some point, the insurance company, of course, wants to make sure that they are protecting themselves. There is no fraud cases, but still there is part of of the deal that where they are able not to pay the claim. And you asked me if I trust my insurance
We'll be
company.
right back after the break.
Introducing Takasure, the life insurance fund that is owned by the very people it insures. You share in the profits from insurance operations and take care of your family even after you're gone.
I actually have two life insurance policies, and yeah, in a way, from two insurance. But what are the odds? What happens if I die and then they go to the beneficiaries, my kids, my family, and saying, but there was some information that was not disclosed, and we will not be able to pay. I will not
Hmm.
be there to defend my family. I'll not be able to negotiate or prove them wrong. So yeah, there is a risk to.
100%. 100%. And actually, those are the anecdotal stories we hear, right? Even from my family, of people who have contributed their entire lives. And once they close their eyes, the insurance company starts, to nitpick on stuff. And at the end, their beneficiaries don't get anything. So, all right. So you've mentioned a number of things, but what do you think is, um, of course, nobody can understand in details, or we're not expected as lay people to understand in details how insurance works. But is there a some sort of bedrock understanding that anybody that wants to deal with insurance must have, in terms of stuff like reinsurance? How does it work? The relationship between the brokers, the insurance companies themselves. Do you want to touch on that, please?
It's tough one. It's not easy to know because usually you just read the document you have. You don't ask about the company, the financial position of the company, if they are making losses or not. But you can go to the basics. I mean, if it's a national company, they are not worried about making losses or losing the capital, for example. If it's a national company, if it's a big and old company, they have good reserves.
Why would that be the case? Why wouldn't they be worried
Because
about
then
making
if
losses?
the insurance company's prime or first goal is to achieve profits, then they will be very specific about the claims. They will study the claims and they will see if it's payable or not. And they have the right to do that, of course. They want to make sure that it's not a fraud case or anything. But if it's a national company, if it's more about the service. It's more about helping people. Someone died, so and we need to pay the money in very few days, quickly to help the family and all that. So it's not a commercial thing. It's more about the service.
Oh, okay, I see. I see the difference. But I think most insurance companies wouldn't be national, right? They would be
True.
commercial
Yes. In numbers, yes.
companies.
True.
All right. And how does that dynamic work when you talk about profits? Because that's something I've been interested in recently to say that any company that is for profit has, um, a number of people that they want the profit to go to. So in the case of those commercial companies, who does the profit go to? Is it you and I as
No,
the
no, it doesn't.
contributors,
It
or
goes to
is
the
it
company. It
an
goes to
elite of people?
the owners of the company, the shareholders, the capital of the company, not the policyholders.
I see. So this is a typical
Correct. Even
shareholder
even in the
setting.
takaful companies, which is a bit more Sharia compliant, there is no like it's not fully Sharia compliant, or I wouldn't say not fully, but the concept is different. It's still there is capital, and there are shareholders, and they own the fund, and they have some control there, and there are a claims department there. There is a claims manager who decides if the claim is eligible or not, if it's valid claim or not. The claims manager is able to decline the claim at the end of the day. So there is a possibility.
Yeah, I see. And so of course in the Web3 ethos of decentralization and everything, we see centralization as something that brings about a lot of avenues for oppression,
Yes,
right? So, what happens when the interest of the shareholders is at odd with the interest of the end customers? So, you were saying, for example, that they have a cap, they need to ensure profits for their shareholders. And at some point, they can have a cap and they can deny claims that should have been paid. Because at the end of the day, they need to make money and they need their shareholders to make money.
and perhaps for the right reason and for a legal reason, they are able to. I mean, it could be a legitimate reason, but they are not helping people. It's not for their interest to pay or help someone. It's not a family. It's not it's a very straightforward legal thing.
If I push back a bit, insurance is part of those businesses that we call, businesses of trust, right? So it's some sort of guarantee, as we were talking about the safety net. So, what
Yes,
happens then when your safety net turns your back on you, and rather than prioritizing you and your claim and your family for what you have been contributing for your entire life or for many years of your life, are there instances where they actually prioritize the interests of their shareholders? Is that always the case because they're a for
absolutely.
profit?
Of course, at the end of the day, it's business. It's a company that is making money, and they want to make profits to pay for the salaries, to pay for the rent, and why not making profits as well? So there is a conflict of interest, of course.
And how does that start?
But
What
there
is
is
the
a
conflict
space.
of interest? What is it?
The conflict of interest is that the insurance company, when the insurance company is paying too much claims, they are not achieving as much surplus.
Mm.
This is a clear conflict of interest. However, there's the distance between 2 points. The insurance company is trying to protect itself and paying only valid claims, and on the other side, the insured wants to get paid when a valid claim happens. Between these 2 points, the there are some people who would abuse and they would get try to get money from the insurance company, and there are insurance companies who's trying not to pay the claims. So this is part of the industry, all these possibilities. That's why going back to cooperative insurance, is a totally different concept. Being the insured are members of the fund and they own the fund, not the insurance company. That's a different concept.
Got that. Got that. Thank you very much. Okay, so um moving forward, actually it's still not clear to me what is reinsurance and what is the role. Normally you think the insurance company takes on the risk, but apparently that's not what's happening. What is the deal with the reinsurance?
So reinsurance companies basically insure insurance companies. The insurance company is the client of the reinsurance company. They give more capacity to the insurance company to insure more and higher values and bigger and more people. And at this point, the insurance company can limit their losses because they know that they will only pay to that much. If they
I
exceed that
see.
much, the reinsurance company will pay for the claims. So they are able to accept more clients. It's more capacity to the market and more capacity to insurance companies and diversity as well.
I
Like you can
see.
have a tower in USA covered by an insurance company in Morocco and
Mm,
reinsured by a company in Germany. So it's diversity. The money is small parts everywhere. So when $2 billion tower collapses, everyone will pay for that. And it's
I see. So this is
with small
really, spreading the risk around to that each and
spreading the
every
risk
single
diversity.
agent ends up paying less. That's very
Correct.
clear. Now they've tried. How do you see that what's the position of the insurance market in the global financial system with all of this reinsurance and stuff? Do they play a large role, or
Of course,
something
yeah.
less
It's billions of
significant?
dollars. It's huge. Yes, absolutely. All the property in the world, all the buildings, or everything we own, the factories, the machines, business interruption, everything is insured.
So I see that more as applying to exactly as you said, right? Businesses, properties, and what
Mm.
have you. And I don't know if it's
Yes,
because of where I come from, because people wouldn't get insurance unless it's something that the government has mandated. Again, so we were trying to pick on brains to see why is that. One of the reasons you gave is, yeah, they're for profit, they're there to serve their shareholders, so they will put their interest above. And then you spoke about an element of inflation. What was that?
yeah. For it, it's so we have two types of insurance. We have life insurance and non-life insurance. Life insurance stands alone and different than non-life because in non-life you are insuring your car, your property, your house. You can put value for these things, but for life insurance you cannot just say that person worth 1 million but this person is only 100,000. We cannot do that. So in life insurance you can put very long-term policy like 20 years, 30 years. Why not? 30 years from now, what enough money is that is can be considered as good money? $100,000, 1 million, 10 million, we don't know. So we do the calculation, we include the inflation, and the payment of the life insurance policy could be in fixed amount. I pay $100 every month for 30 years, or it's increasing with 5%, 10% every year. So it's definitely affected with how much money we pay today and how much money we get at the end of the insurance policy. So inflation is part of that. What was the other part of your question?
Sorry, very, very clear. I think that was the inflation part. So I got two things from you to sort of justify why people have an aversion. Do you think there is something else? I've heard as well there was this issue of, accessibility of, insurance companies not going into areas that they deem not profitable. So can you speak to that, please?
That's true. If it's not economical for the insurance company, why would they go there? If I want to insure my mobile, for example, and it's my mobile is very cheap, it's very small money. How much premium I'll pay for that? Maybe $1, which is nothing. It's not economical, and they wouldn't go there. So if I have a small shop in a distant area somewhere far, which is will cost the insurance company more money to go there and check it out and do the survey. They will not go there. That's true. But these things are changing now with the online, and everything is changing now.
All right, so it's the case for the disenfranchised, right? So people who are already not generally they don't have access to the financial system, the global financial system, and the insurance
Could be,
companies. Yeah, sorry,
and could be the culture. Could be
and
the
could be the
culture. If we're
culture
talking about
as well.
life, if we're talking about life insurance is one of the most difficult products to sell,
Why
and
is
that's why
that?
it's
Because you've made a very beautiful
because
case in the beginning.
you need to convince people that they pay money that for the benefit of people after they die. So
Mm.
it's not easy to talk them into that, and young people don't care about it much. So you need to find someone who's really a bit old, and yeah, it's difficult, and usually it's sold by getting people to go to the street, meet. So face to face, it has to be a person, and that they will sell you that product. Other products, as you said, is maybe it's illegal by the government. They have to buy it, like life insurance, like motor insurance, or
And so, Ahmed, what are the inner workings of the financial inner workings of insurance? Talk a bit about margins, please.
margins that the client would pay, the insured would pay. So there is the risk premium, which is what the actuaries calculated the risk. So there is a risk, and how much is the risk would cost. We calculate it and we give it a value. And then the insurance company would take that value and put on top of it, the cost of their admin, the salaries, the rent, and everything. And it's different from a company to another, but of course, and the distribution channel, of course, they pay for brokers, they pay for people to sell their products, for marketing, for
And they
advertisement.
pay for
So
reinsurance as well.
no, reinsurance would share the premium with them. Not, it's not like they
I
pay
see.
something
So it's
additional.
from the premium. Okay.
Yeah, but the acquisition costs is added to the risk premium, and then we get
Got
the
it.
gross
And
premium, which we will finally see.
so we can say that they're quite operationally quite expensive operationally and very heavy.
It is that margin is something added to the net premium or the risk premium, and it could be a big margin that would make it more expensive, of course. At times where the market is hard and the competition is very hard, insurance companies would play with this margin and try to reduce it.
I see. So that's another aspect of control and centralization. So let's talk a bit my with my with very simple brain. I'm not I'm not too much into mathematics. So if
Me
I
too.
pay oh, come on, if I pay $100 to an insurance company and they share in my premium with reinsurance, plus they pay higher operational fees, is it fair for me to then infer that the actual amount that goes to paying claims is lower? And why isn't that dangerous?
How's that come again? I didn't get the
So
question.
so I've paid $100 to the insurance company, right? They've removed
Mm.
from my $100, the premium I've paid, they've shared 50-50 with the reinsurance, for example. So I have $50
Yes,
left. And from the $50, they've paid cost of acquisition, operational costs and
right.
admin, I don't know, $25, right? And they left with $25.
Yes,
Of course, there are
correct.
investments, but as we know, they're highly regulated. So they're not investing in stuff that would bring them back crazy ROI. So how comes the pool of money to pay claim it seems to me that the pool of money that is left there to pay claims is actually lower. Is that
Right.
correct?
Yes, yes, I get what you're saying. Yeah, it's a
Yeah.
very good question. So if you're paying $1,000 to cover your car, and your car worth $100,000, how the insurance company at the end pay for that money? They only got $1,000 from you, but they also got $1,000 from you and another million people. So they
Mm.
collected large amount of money, and by probability, the science of probability, we know that not everyone will get accidents, or not everyone will die if we're talking about life insurance. So that money we take, and if it's correctly priced, then the amount of money we collected is enough to pay for the claims. If it's overpriced, then we made it a bit expensive, and we paid for everything else, so we're making a surplus and we're making profits. And so, and this is where the margins come. So you can reduce your price or increase your
So
price.
it's like some a sort of economies of scale, right? The more they have, then the less all of this
Yeah, it's very
matters.
dynamic. Yeah, exactly.
Understood.
Yes.
Wonderful. Thank you very much for that. So now let's talk about Takasure as an alternative. Can you please explain to our viewers what is Takasure, and is it a good alternative to, conventional insurance?
Takasure is amazingly good alternative. It's a fund and it's a community. It's a blockchain based, so it's transparent. It's a DAO, so it's decentralized. There is no person there. There is no that claims manager that will decide if the claims payable or not, declined or not. It's an algorithm that will calculate everything, will check on the eligibility of the claims, and will approve it and pay it immediately. And a lot of things are different in Takashur. You have a question?
Yeah, I actually wanted to, because we jumped into the algorithm and there's no claims manager and all of that, and I'm a bit confused, or I know some of the viewers will be confused. So just simply the base explanation, is this still an insurance? Is it still something that people would pay regularly to get, for their beneficiaries to get a monetary
It's
benefit
very
when they
much
are
yes, yes.
gone?
It's very much like insurance. It's Takashur, so it's Takaful assurance, but it's not an insurance company, so there is no capital to lose or to worry about. It's a fund, and the insured are the members of that fund who are contributing with the payment. This is a contribution that's going into the fund. So if the fund is going well, or making losses or making surplus, this is going back to the members, to the the members are the owners of the fund, not Takashur. Takashur has no interest in the results of the fund, except that they want the fund to sustain, to go for a long time, for go for 100 years. That fund would be able to sustain, collect contributions, and keep paying claims all the time.
So I have many, many questions that spark in my head as you're talking about that. Number one, what do you mean a fund that is owned by its members? What does it mean? It doesn't have shareholders.
No, there is no shareholders. It's a cooperative insurance, so everyone is paying part, is has share with as much as they are paying in that. Yeah, so if there's a surplus in the fund, it will be distributed over on to the members of the fund, not to the company.
That's very,
So there
very
is no
interesting.
conflict of interest in this case. There's no conflict of interest to pay claim or not.
And you mean in terms of approval of the claims and rejection, right?
Correct. Yes, absolutely.
I'm just trying to wrap my head around this. It's a new concept, really. So when you say it's owned by its members, does it mean that they make the decisions? I understand that the surplus goes back to them, but how does it work, Yani?
It's the voting system. And before we get into that, I need to remind you, I was born in the 1900s, so I'm not very much aware of the blockchain technology. However, it's a transparent thing, and decentralized, and it's not a company with a capital and making profits and the regular or the conventional way. It's a very special model.
So in terms of concept, you mentioned before that conventional insurance, they have reinsurers. Um, I think of it as input and output,
Correct.
right? So the input is they need people, they need acquisition, right? They need to acquire, so they have those brokers and all of that. Those
Right.
Takasure has that, number
Yes.
one. In the middle, between input and output, you've mentioned that there are fees and there are admin and operational costs and whatever, whatever. Does that apply to Takashure?
True. True.
And in terms of outputs of people who actually, you know, uh, um, support that risk as reinsurers? Does Takasure has that
This
as
is
well?
like three, four questions. Let me go one by one. Yeah.
Yes, I know, right? But I was just trying to frame them. Input, I don't know, middle or right at the center, and then output. You know.
Okay, so let's go one by one. So Takasure is a very innovative idea. It's something different. The founders of
Okay.
Takasure created this factor which is called benefits multiplier. So you whatever you pay, that multiplier, if the multiplier is 100, then the benefits is 100 times what you paid. It's as simple as that. So you collect the premium,
100
and
times you said.
if it's 100, if the multiplier, it's a factor. It could be 10 times, 100
Okay.
times.
Okay.
It's
So it could
different
be
from
another
person.
number.
Yes.
Okay, got it.
So this is where the underwriters come. The underwriters at the beginning, they assess and they look at the members, the new member joining. They calculate the benefits multiplier, and they have a number. So the every member in the fund has a benefit multiplier. Let's say that the unfortunate happen and someone passes away, the algorithm calculates again and by itself and balances out the all the money inside the fund. So in this case, the fund is always sustainable. The and this is why we don't need reinsurance there. There is no need for a backup.
Mm.
It's a self-sustained fund. It can keep going forever. This is one of the unique things about Takashur. It's an invention, actually.
Yeah, I've never heard of it before. So,
Yeah, it's totally
I
new.
mean, this concept before. So okay, very interesting. Now, in terms of the operational cost, I think we're in the middle part. Um,
Yes.
how does that work? Is it as expensive?
So similar to Takaful model, yeah, similar to Takaful model, there is a wakala fee that it is paid to the operator, which is in this case Takashur. So at the beginning, there's 20% of the contribution deducted as wakala fee, and then the 80%. So it's fixed. You cannot just increase or it's an amount that we agree on at the beginning. Yeah. So for now, it's 20%. 80% goes to the fund, and then depends on the performance of the fund. This 80%, the value of this 80% could increase, and there could be a surplus, and this surplus could be distributed again at the end of the year or in a few years back to the members.
That goes back to what you were saying that the members own the fund. So when there is a surplus, and what do you mean by surplus? Are those profits? But then
Yes.
whatever that is, it will be distributed to the original people who paid for contributions.
So the amount payable to the contribution paid by the member, there is a fixed amount that is deducted, which is called the wakala fees, and then the rest of the amount goes to the fund. Inside the fund, there are reserves, and we divide that amount into technical items and parts that goes to reserving and for the long term thing to protect the fund and keep it sustainable, as we said, that it can keep going.
So you actually mean that the money the company makes out of this is 20% of the premiums pretty much.
Yes, exactly. Yeah. This is what the company. Yes, this is what the company make, and then the 80% goes to the fund, and the 80% inside the fund, if the amount of money, the contribution is more than the claims paid, this is a surplus by nature. This is normally so. Let's say nobody died this year, so there's surplus. Where the surplus goes to, go to the members, redistributed over the members.
Got that. Thank you very much. And just in comparison to what my question from before, it was if I give $100 and 50 is with the reinsurance and 25 with all of the cost, then there is 25 remaining, and the conventional insurance then relies on economies of scale and having loads of people to make up for that gap. So in this
Yeah.
case, it wouldn't be that lower percentage. It's actually 80% as a.
It's irrelevant for the insured if the fund makes profits or not. They don't share the surplus or the losses. The result of the technical result of the insurance company goes to the shareholders. So maybe
in
they
the
have enough
conventional?
funds in the conventional insurance, yes. If it's overpriced or
Okay,
underpriced, if they are making good profits or not, nothing is going back to the insured.
got it. All right. All right, got it. Thank you very much. Now there are talks about, you said benefit multiplier. How comes I would pay a certain amount and then get more than that? From where would the money come from? Like I pay
It's not.
$100, for example, and you
Yeah,
said I am assigned a benefit multiplier, and so if I have a
correct.
claim, then my family would get 100 times 100.
Yes, absolutely. Yes, it's a calculated thing. It's based on mortality rates. It's based on statistics.
So the calculation part I understand. What I do not understand is where you got 10,000, because if you're telling me you do not have reinsurance, you do not have X and you do not have Y, it means 100 people can pay $100 and just one claim would wipe out the fund entirely. No?
Yeah, this is the work of the underwriters and the actuaries. So the actuaries have to calculate very accurately how much premiums or contribution that these should collect from the members. Each member is different. Younger people different from older people. People with medical condition is different. So there is a cost different for each member, and the probability, or what we call mortality tables, and mortality tables are different from a country to another. It's very complicated calculations that is done. At the end, we make sure that the 10,000 is there in the fund, and a lot of people can get paid from the fund, and the fund stays sustainable.
Got it. Thank you very much. Now you've touched on the claims side, from a financial perspective, as we were saying that the operational costs were lower. Um, but just for the viewers to understand how, because that's one of the criticisms, right? So it's all great. Ahmed can be telling us that all of that right now, but when it's time to pay claims, they don't pay. So how does that work? How does claims management work
In
in Takasure?
Takasure, it's a smart contract. So the insurance policy in Takasure is a smart contract, and it's an algorithm, and it's automatically calculated. There is no people or persons who interfere and decide this is okay or this is not. There is a mechanism there that after the eligibility of the claim is there, few members of the fund, people, humans now, will look at it. Three members maybe, and they are randomly selected, and we make sure that it's totally fair. Nothing is nothing from the system is interfering with making the decision. And if they approve it and they vote for it, the claim is immediately paid. So it's a totally different and fair as much.
So it's actual. So if I understand correctly, you have smart contracts, contracts that execute themselves by themselves on the blockchain, and
Correct.
it's a mix of them and
Let's
actual
say
members
true, correct, yes. And
who
let's
do
say
the
at the
claim
first,
management.
yes, exactly, yes. And at the first step, the basics of approving a claim is that this claim is valid. So we need to look at the documents that proving that this is a valid claim. If the documents are fake, then we will not go to the next step. It will stop there.
Got it. And just for the benefit of the viewers, when you couple this with the sort of, I would say, decentralized claims management, um, even though we did not touch extensively on how Takasure uses blockchain and why, I think that will be in another episode. But when you couple that with the fact that you said it doesn't matter whether or not the fund makes profit, then it becomes clear to me that if I am a member from the fund and I am approving some, or I am analyzing, assessing somebody else's claim, I better be impartial, right? Because at some point it might be my claim that another member is reviewing, and I would like them to be impartial. So can you touch on, again, you said there is no conflict of interest, but how, what is
Yeah.
the extent to which that conflict of interest is removed? Because here I understand members do pretty much most of the things, right?
Okay, so look at it as separate entities, the fund and the company. The fund is on its own. It's getting contribution along the way. Every day, new people are joining, becoming new members, and it happens, and people die, and we pay claims. So money in and money out. The calculation of the fund is done in a way that this fund will stay sustainable. Takasure is not interfering in the results of the fund. They have no conflict of interest of if they pay a lot of claims, they will lose money. So there's a risk. So let's stop the claims. That conflict of interest is not there.
Got it. All right. Thank you very much, Ahmed. I think it has been super insightful for us to understand the basics of how insurance works and Takasure as a new concept. So before I give it up to you for your closing remarks, we have prepared something that I hope you will find fun, and it's called uh, adding a dash of playfulness to insurance talk. So the talk can be very, very technical. It can be very it can lack a bit of color when you think about death, right? Especially life insurance, but it's the
Sure.
inevitable, and we have to talk about it. But as we're talking about it, it doesn't mean we can't have fun. So let me just ask you just a number of short questions, just for us to have fun and pick your brain, inshallah. So if you could insure one unconventional item or aspect of life, what would it be and why?
That's very deep. And usually you insure the most valuable things in your life. Uh, but the most valuable things in your life are priceless. I would go for the family, but it's priceless. I cannot insure the family. There's nothing will compensate for that.
Yeah.
Yeah.
100%. That's a very good answer, to be honest. I've
Okay. Good.
heard, I've heard, I've heard of coverage, falafel coverage for falafel lovers, just in case they
Yeah.
die while eating it. So anywho, what's the most bizarre insurance claim you've ever come across in your career? Did you actually get the experience of approving and rejecting claims?
It's not a claim I received. It's something on the news I've just seen recently. Um a drug dealer received uh, some expired drugs or something, and he went to the police to report to the other guy because he sold him something that is expired.
Oh my God. Was
Uh,
that was not in Egypt, was it?
no,
That
no,
could
not in
not have
Egypt.
been. Yeah, that is in one of the countries of, it's a freedom why you can walk up to a police officer for issues and not get arrested. So yeah, that's literally crazy. All right. So if you were an insurance policy, what type of coverage would you offer and to whom? If Ahmed Imira
Hmm.
was an insurance policy, what type of coverage would he offer and to whom?
A friendship to my close friends.
MashaAllah.
I got your
That's a
back.
very deep. Yeah. Allah Mubarak. Nice, nice, nice. Okay, last one. If you were stranded on a deserted island and could only bring one insurance related item with you, what would it be
Oof.
and why?
Uh, Laila, those are
Maybe
very deep questions.
your insurance card, just so you prove to the sharks that you're
Uh,
actually insured.
marine
I don't know if
insurance.
that would help though. Yeah, they would want to kill you to get the money, unfortunately.
I would want a very big ship so I can travel back home. I would get
A
marine
very
insurance.
big ship to travel back home. Inshallah. That's good. That's very, very smart. Thank you very much, Ahmed, for your time. Do you have any closing remarks? Where can people connect with you and get to know more?
I love your questions, and I really had fun. I'm grateful for this interview, and of course, I will love to receive more questions.
100%. Do you have any LinkedIn, anything that we would link it in the description? in the description anyways. Thank you very much for your time. And guys, that's it. That's a wrap of this bonus episode for Taka Talk Season 2. Of course, follow us for more. This was just, the tip of the iceberg. Inshallah, we will go deeper and deeper into Sharia compliance, blockchain, and all of the different items that, very, very interesting to see with this new innovation of Takasure. Have a great one and salam alaikum. Bye.
Alaikum salam.